August. Mark Putrino is here with us today, and he's got some good news for you. And then we'll talk about the other bad news in the world.
All right. Hello, everyone. So I woke up this morning and my ankle is sprained, and I don't know what I did, but I can barely even walk.
Oh,
So,
that's bad. You know, you're better off breaking a leg than you are spraining an ankle. I mean, breaking an ankle than you are spraining it, because then the ligaments are, stretched.
well, you know what? I don't even know what I did. I didn't work out yesterday. I didn't run. I mean, I didn't really do much physical activity at all yesterday. And I wake up this morning and my friggin' ankle is like swollen and I can barely walk.
Oh, that
One of those
sucks.
fun things about, getting older, I
Yeah.
guess. All right. So, anyway, what should we look at first? Let's take a look at Apple because Apple
Yeah.
reported. And I don't know if it was good, bad, or indifferent, but the stock is down. So this is going to weigh on the markets, obviously. This is the
Yes.
biggest company out there. So Amazon is up, but Apple has a much bigger weighting. Let's take a look at the weightings here. Yeah, man. This happened to me once before. It was probably about 4 or 5 years ago. I was walking Clifford in the woods, and it was before I got him one of those chain collars, and he saw something, he went after it, and he pulled me, and I jammed my toe.
Mm.
And it didn't hurt at all. And I woke up the next morning, dude. I couldn't even get out of bed. My toe hurt so friggin' much.
Oh yeah, like turf toe. You jammed it into your foot.
Yeah, man. And it's like I guess it takes a while for the swelling to actually start, but I don't know what I did. But anyway, well, whatever. I guess when I'm done, I'll just go elevate it. All right, so here is the weightings, right? Apple is 7.5% of the S&P 500. Amazon is 3%. So obviously, Apple is more than twice the weighting of Amazon. Um, but Apple is down, and this is what I talked about yesterday. If this thing gets down to about 183, that's probably where it bounces, right? 183 was resistance, and we're at 186, so we're really not that far away. So that's just something to keep an eye on. And as we know, we tend to get support at former resistance levels, and that's because of our psychology. We have investors who sold here who are like, they thought they did a good job for over a year, but then the price goes higher, and a lot of them tell themselves, oh, you know what, man, I made a mistake. I'm going to buy my shares back, but only if I can get them for the same price I sold them at. So 183, probably get a little bounce there. If we get there, we're at 186. My suspicion is that we will. Once again, for those of you who are new or weren't here yesterday, this sentiment thing that we look at has gotten really high again. All right. This is a website, AAII.com. It's a free website. What these people do is I'm not a member of this, but they interview their members. It's an association, the American Association of Individual Investors, and they ask, are you bullish, bearish, or neutral? Now, notice how 2 weeks ago we got to up to 51, which is a very, very, very high number. Historically, only about 37% of people are bullish. And this precluded is that even a word? This preceded the sell-off. Now, for some strange reason, I don't know why, we're back up to almost 50% again. We're at 49% bullishness. So extreme bullishness is actually a negative thing or a bearish thing for the market, because what happens is if you have the vast majority of investors are bullish, they spend their money and they invest their funds. And when they run out of money to invest, the market runs out of buyers. So when I look at this makes me think that the market's going to continue to go lower. This is, I would say through mid-June, it was about 30, 35%. Then we got some good earnings or some AI stuff. And I'm so sick of hearing about AI, frankly. But we got some AI stuff out of NVIDIA and whatever. Maybe that's why people all of a sudden got really bullish. But just remember, excessive bullishness is bad for the market, and excessive bearishness is good for the market, because that means everyone is sold. Now, I despise CNN, but I do sometimes look at the CNN. I mean, if you could do what Jeffrey Tobin did and not get fired, it's like, dude, come on. Remember that guy?
Yes.
And you know what he did? He got got caught shucking Bubba on a Zoom call. It's
No,
like,
oh, that's right. That's right. He was the one.
how do you get rehired when you do that? And they're all about this, that, or the other. He wasn't just shucking Bubba, in the middle of nothing. There's clearly a woman on that call that he is attracted to, and it's like, all right, well, yeah, it doesn't matter. You can masturbate on Zoom calls, but as long as you hate Donald Trump, it's okay. We'll rehire you.
Mark,
But
I
anyway,
think that's the whole point, though, is that we've gotten to that point that we've lowered our standards of what is considered moral in this country, and people get away with. I mean, cocaine in the White House, dude.
yeah, and
Who would have
they
ever
don't
thought
even
that would happen?
follow up on it. And what's really kind of messed up is I was in New York City during 9/11, so I remember it very well. And right after 9/11, there was the anthrax scare, right? What is anthrax? Anthrax is a white powder. So that bag of coke could have been a bag of anthrax, and everyone who was in that room could have died. And they can't figure out who left it there, which is
Exactly right. They could find Ted Kaczynski in the middle of the forest in a freaking 10 by 10 cabin sending out anthrax, but they can't find out who dropped the cocaine in the White House. Come on, man.
I know
Come on.
Come on, man. And I'm surprised the Democrats don't get mad that Biden says, "Come on, man." It should be like, "Come on, person," because
Or they, them, they, you got to have as many, whatever you can throw in there.
I thought you're not supposed to say man or woman anymore.
You're not.
All right, so that's going to be my new expression. Come on, person. All right. Anyway, here's our S&P 500, and this is where we start, and we're up a little bit, but this is like nothing. It's 12 basis points. This is pretty much nothing. You'll notice the 450 level is important, and sometimes we get important levels at nice round numbers, which is kind of strange, but it shows that it's human psychology. Like, why would the market find support at a nice round level like 450? There's really no reason for it. If efficient market theory was true, there wouldn't be support and resistance levels. But it just shows the psychology. So anyway, if we go lower, we can look at this level here. Let's see what this is. All right, so 443.50. I'm going to make that. Now, my guess is if we get down to there, and I suspect that we will, maybe not today, but
that's a gap, dude.
Yeah, right. We got resistance here and here, so it'll probably be support. Now, you get you get support at former resistance levels sometimes because you have people that sold that are like, the price went higher, I'm going to buy my shares back. And we also have this little bit of a gap in here too. Now, there's an old expression on Wall Street, gaps tend to refill, and there's a reason for it. Now, in this situation, we got something that could gap down. Notice how back here we gapped up. One of the reasons why we get support, as we have seen, is we get sellers who want to buy their shares back after the price moves higher. Now, when you gap through levels like this, you make this rapid move, there are certain price levels we didn't even trade at. On this particular day, we closed here. The next day, we opened here. The next day, we opened here. So from 443, let's call it, to 446, there was no trading. And then from 446 up to 448, let's call it, there was no trading. Well, so say there was a little bit of trading around 446. But my point is this, right? Because we weren't there for a long time, and because we gapped through these levels, there's no one who sold who wants to buy their shares back. If it didn't trade there can't be remorseful sellers, right? I mean, that's just kind of common sense. So I think there's a really good chance that we get down to 443-ish, 444, then we bounce. I mean, I don't think the market's like going to crash or anything like that, but with those sentiment numbers that high, I just think that sets the stage for the market to go lower. I mean, I went back through those AAII numbers, and probably for about 30 years, and there's only a handful of times where the bullish sentiment got up to 50, and maybe 10 times over 30 years. And 9 of them were followed by pretty significant sell-offs. And the 10th time, it wasn't a sell-off, but the market stopped going higher. Sentiment's probably it's one of my favorite subjects when it comes to the markets, but it's kind of hard to really kind of quantify. And like even this, right? This is just asking people their opinions. So someone might say, "Oh, I'm bullish," but maybe they haven't bought their stocks yet, or maybe someone says, "Oh, I'm bear." I mean, a lot of times people get bearish, but they don't sell. But anyway, it's something to pay attention to. It's an outlier. Notice this highest reading was 51, and this was this was 2 weeks ago. And then if we go back to 9/21/22, if we get a really high bearish reading, that's a bullish signal. So let's look at that. So let's go back to 9/21/22 of last year, and let's see what happened when we had extreme bearishness. So that was like right here. So people get really bearish because the market's going lower, and then guess what happened? It was like a good time to buy. All right, now let's go look at our technology sector. Now remember, people, hello Sean, hello Mastermind, hello Brandy. People say that, people think Amazon is a tech stock, but actually it's actually in the consumer discretionary sector. So that's not going to have an effect here. Now, wow, look at that. So, oh wait, why am I bringing up Apple? I want to bring up XLK. This is our technology sector. It's an ETF that tracks the sector. So down 68 basis points. This all has to be Apple. This too, I think, is going to go lower. Now here, it's not surprising that this looks kind of like the S&P chart, because this is the biggest sector in the market, right? This is like 28%. But anyway, if I look at this chart, I don't see anything, which I don't think we're going to get support until we get down to around 167. So that's, for a sector, that's a big move. It doesn't sound like much because you're probably like, oh, well, it's only 5 points. But for a sector, that's a fairly big move. And that would be probably about, let me just kind of do the math here. So that would be about another 2%, I guess, lower. So I think we could get there. Now, let's see what the financials did or are doing.
Weren't there the most calls ever that were purchased in the last couple of weeks, wasn't it? Mark, you were talking about that?
Yeah, and it was very similar to the volume that occurred in December of 21. And what was December of 21? Well, that was the peak of the 10 or 12-year bull market. Yeah, man.
I imagine there was a lot of calls yesterday when Apple washed out.
Man, my ankle really hurts. I don't know what the hell I did to it.
Mark, you don't think you have gout, do you, buddy?
No, it's my ankle. It's not my toes. It's
yeah, but listen, a joint's a joint. It started with me behind my knee, and then it went to my toe.
You had gout?
Oh yeah, I take albuterol for it. I don't have it anymore, but I still take the medicine because I don't want that shit to come back.
Really?
Yeah, it hurts. That's misery.
Yeah, well, that comes from what? Eating red meat, drinking a lot.
It's purines. You can get it from, I get mine from shellfish. Like if I eat too many lobster or crab, like if I go on a crab bender, man, are you kidding me? Next day my knee will be swollen up as big as a basketball.
Are you serious?
Yeah, that shit's no joke.
Wow. Yeah, they used to call it the
any
rich
kind of
man.
shellfish. Yeah, they did, but it's more what happens is caused by uric acid being in your joints and the purines that are in red meat and shellfish and that kind of stuff. So anything with high purines will cause you to have uric acid in your blood, which will settle in your joints when you have gout.
Huh, interesting. I did have chili yesterday for breakfast and for dinner. Maybe that's got something to do with it.
Maybe. But you might be on the line. I mean, it's something simple. Once you figure it out, you just cut it back a little bit, and then your diet can correct it.
Yeah. All right. Well, whatever. It hurts.
It does do that.
I'm going to go with sprain, though. Maybe.
Okay. That magical sprain, kind of like the magical markets.
It's kind of fun. It's one of the fun things about getting older. You wake up and your ankle is sprained and you didn't even do anything. All right. Anyway, so financials look weak. You know what? I want to look at our healthcare sector here. Because it looks to me like we could see some kind of a move here. So we're basically flat. But one of the things that I like to do, and I think one of the things that as the traders you should really understand is you really should let the market tell you what to do, right? You shouldn't come into a day with like a preconceived notion of, oh, I'm going to trade this or I'm going to trade that. you look at various things and you say, oh, look at that. Now, when I look at the healthcare sector, let me start again. When do markets move? When do stocks move? When they get to important price levels or when they're overbought or oversold. A lot of times they make a tradable move. Now, clearly, you don't need to be a market guru to see that this level down here, 133, let's call it, is important. We're trading pretty much right there. So we have resistance, and resistance turned into support. Now, of course, you could go ahead and just trade this if you think the ETF, or if you think this is going to break down, you could just buy puts on XLV. But what you could also do is look within the sector for things that look even more compelling. Because if you're looking at a sector, what are you looking at? You're looking at the average or the aggregate of the stocks that are within the sector. So therefore, just by definition, you're going to have things that look like they're going to move more and things that look like they're going to move less. So we go to our holdings. Now, I went through these and I didn't really see anything that looks that tempting other than UNH. So UNH is the biggest stock in the sector, but take a look at UNH, United Health. So this is something I would kind of probably consider for a short idea or potentially buying puts on it. But once again, I would wait, right? We got to let the market tell us what to do. And a big part of being a successful trader is realizing it's not about trading. Successful trading is not about being right. It's about making money. And that sounds kind of like counterintuitive, but it's true. Now, I think there's a good chance this is going to go down. I think that the market's going to go lower. Now, I could be wrong, but that's just what I think. So in a situation like this, trading at 505, well, this black line here is 500. And it makes sense that 500 is an important price level because people like to buy things or sell things at nice round levels. I mean, people tell themselves, oh, if it gets to 500, I'm going to buy or sell. No, people don't say if it gets to 497, I'm going to buy or sell, or if it gets to 504, I'm going to buy. People like nice round levels. You can even see down here, 450, support there. So what I would do is just kind of wait because there's a chance the market bounces. I mean, I could be wrong, but I think if we get below 500, then there's a chance that we keep going lower, right? It's an important psychological level. It was resistance. It's become support. And you have this rapid, fast move up, move higher here. So we have a gap, places where we don't trade. Remember, one of the reasons why we get support is because there are levels that are formerly resistance. So you have people who sold who want to buy their shares back when the price goes higher. It's seller's remorse. When you blast through these levels really fast like this, you don't have enough time for there to be a really large group of sellers who want to buy their shares back. So I guess you could call it kind of like vested interest. In these price ranges here from, say, 460 up to 500, there's probably not going to be a lot of support or remorseful sellers trying to buy their shares back. So if we break down, there's a good chance we get another rapid move. One of the things about markets is when you get a rapid move higher or a rapid move lower, but when, say, you get a fast move higher like this, when the market reverses and gets back to those price levels, you tend to get a rapid move lower because there's just not a lot of vested interest in these price levels. And you can even see it here, right? Like, look at this. I'm still upset that they took my arrow away. I got to send them a nasty email or something.
Yeah, man, I would.
I don't know why they would do that. But anyway, look at this, right? Here's a good example. You get a rapid move lower. What's one of the reasons why you get support? Why you get resistance? It's because you have remorseful buyers trying to sell their shares to get out at break even. So when you move through these price levels really quickly, you don't have a lot of time for there to be a lot of buyers. So after a few months, when we move back up to these price levels, look at that. We make the quick move higher, and then we make the quick move lower. Sometimes you get things that trade in ranges. I mean, even here, rapid move lower, rapid move higher. And sometimes you get these, if it's an important price level, the stock will stay around there. But it's I mean, look, like fast move higher, fast move lower. I don't really hear anyone else talking about this other than me. But anyway, so we had a rapid move lower, stock traded, whatever, gets back there, rapid move higher, rapid move back lower. So anyway, I think if we break this support, there's a good chance that we get a quick move lower. Arrow tool, move to arrow sidebar. Yeah, but I don't like the new arrow. You mean this here?
Yeah, I think they give you
Oh
an
wait, oh
option.
look, there it
Oh,
is.
there you go.
Oh sweet. Oh cool. Thank you. Appreciate that.
Oh man, you just saved Mark's day, Stephen K.
All right. Anyway, so that's healthcare. So let's go back to the sector. And again, you can go look within the sector. So what we're looking at is an ETF that tracks the sector. When I first became a trader years and years and years ago, it was really hard to get charts on individual sectors because companies that have the charts or whatever, they want to sell it. But then in the late 90s and early 2000s, you had all these ETFs came along. So this is the ETF that tracks the sector. Matter of fact, my first trading job, I was working for Mario Gabelli, who's a very famous money manager, brilliant guy. And there was a meeting on the floor of the American Stock Exchange, and he sent me to it. And it was when they introduced the diamonds, which are the ETF that tracks the Dow Jones. So I go there, and I was probably 29 or 30, right out of business school. And anyway, I go and I get sat at a table, and they're like, at the table, dude, I'm sitting there. It's a round table. Rudy Giuliani was there, David Dinkins, Paul Volcker, and I'm at the table with them. And they do the introductions. It's like, oh, here's Rudy Giuliani, the mayor of New York. Oh, here's David Dinkins, the former mayor of New York. Here's Paul Volcker, the former head of the Fed. Oh, and on behalf of Mario Gabelli, here's Mark Putrino. So, but anyway, it was pretty cool. And I'm glad
sitting with some heavy hitters there, man.
Yeah, dude. Yeah. What my takeaways were: Paul Volcker was a big guy, probably 6'5", 6'6", 6'7", and Giuliani is a small guy. He's probably 5 feet, 5'2". But anyway, yeah. I mean, they were all kind of cool, and so those were the diamonds. So DIA is their symbol. These are the ETFs that track the Dow Jones. So this is where it got introduced. And as a matter of fact, if we go back to all, we could probably figure out exactly when that was. So yeah, so like that was like right here. Like so Gabelli hired me in 97 in August. So this is January of 98 when this started trading. So it was probably right here. Was when I had
So wait a minute. In 4 months, you have impressed that man enough for him to send you to sit down with Paul Volcker?
I think if Gabelli hires you, you have to impress him, dude. I spent 9 months trying to get in there.
That's pretty awesome, Mark.
Yeah, I had interviews in January, and then I would call like once a week and be like, can I speak with Mr. Gabelli? And they'd be like, who's calling? And of course, he wouldn't take my call. And I said, I interviewed, and I would just want to tell Mario I'd like to come and, work there, blah, blah, blah. So I was like Bud Fox. Remember how Bud Fox keeps calling Gordon Gekko in Wall Street?
Yeah, yeah.
So then that went on. So my first meeting was in January. So then it was the night before my birthday. It was August 28th. My birthday is the 29th. It was a Thursday night. And 11 o'clock, the phone rings. And I wasn't even going to pick it up. But I figure, all right, this is some of my drunk friends down at the bar that want to, have me come down and buy me drinks for my birthday. Because I used to live like in a downtown area. So I could have just walked down to the bar in 5 minutes. So I pick up the phone and I'm like, and it's like, this is Jane from Mr. Gabelli's office. Mr. Gabelli would like to meet you tomorrow morning for breakfast at 6 a.m. at the Putnam Diner at Greenwich Avenue. And I was like, okay. So anyway, I went in there and sat down, and all of a sudden, friggin' Mario Gabelli comes in. And I mean, back then he was like, I don't think he's ever going to retire, but back then mutual funds were really big, and he was like one of the mutual fund kings. So it was a very prominent person. I mean, I don't know if he was as prominent as, say, like a Warren Buffett, but it was pretty close. So anyway, so Mario comes in and he sits down and we have this like really nice conversation. And he's very, Mario's very pro Italian. Obviously, he's Italian, and he does, he gives money to Italian charities and Italian this and that. So now my great grandfather, Tony Lauricella, it's like The Godfather. He came over from Sicily, couldn't speak a word of English when he was a kid. By the time he was 40 years old, he retired because he had made so much money. And he made
That's
his money
American success story. That's awesome.
He made his money in real estate. And believe it or not, he had all his money in a safe because he didn't trust the banks. And when the Great Depression came along and real estate values plummeted, he went out and he bought up all these buildings. So on Greenwich Avenue, to this day, there are buildings that say A.T. Lauricella. And the reason why he did that is because people were prejudiced against him because he was Italian. And, Greenwich was a very waspy, very wealthy place. And he just did that to kind of like stick it in people's face, like, oh, this is my building. So I told Mario that story, and he really like thought it was really cool. So anyway, he's like, so when can you start working for me? And I'm like, how about today? And he's like, okay, just go to the trading desk. Like, I go to the trading desk, and everyone's like, who the fuck? Sorry, don't want to swear. Everyone's like, who the hell are you? And I'm like, oh, my name's Mark. Gabelli, Mr. Gabelli hired me. And they're like, oh, okay, well, come sit over here. And that was it. And then about a week later, there was a guy there who was a market maker, and he left. He went over to Newburger and Berman, and Mario's like, that's your role. You sit in that seat now. So yeah, I became a market maker, and I was like, if you go to like Goldman Sachs or Morgan Stanley, you go through all these training programs and so forth. But this was just like, hey man, you're the market maker now. And I just sat there and I'm like, what the hell am I supposed to do?
You know what? Some of the best training you ever get in your life is when somebody says, hey, you do that job. And then you go do it and you're like, oh man, this is cool. And you're really good at it.
Yeah. So I became a market maker. So I was there for about 2 years. And, that's why I know so much about what market makers do. It's because I actually was one. And then I left there to go over to SAC because frankly, Mario's son came in, Matt, and me and him didn't get along. So I was like, I'm out of here. And I took a job over at SAC working for Steve Cohen. So, my first 2 trading jobs were literally working for 2 of the most prominent people in the history of the industry. Gabelli's probably one of the best money managers, and Cohen is probably one of the best traders of history. I mean, it's a little bit different. Mario's more of a buy and hold, long-term fundamental guy, and Cohen's more of just like what we call fast money, just like trades in and out and so forth. But
so were you more doing fundamental models when you were working for Gabelli, and then more charts when you were working for Cohen?
No, I really got into charts when I was at SAC because SAC, everyone looks at charts. I mean, Cohen had like his desk, he's probably surrounded by 15 screens, and it's all just charts. Charts. He's like your complete technical guy. And what would happen over there was that he had all these different teams that were trading certain things, right? And that's what he does. He was a great trader, but he also brought in people that were like the best of the best, and he would pay them so much money that they couldn't say no. So my job was to execute over-the-counter trades. Back then, the over-the-counter market was like we would trade millions of shares of Intel, like buy 1 million Intel, sell 1 million Intel, buy 1 million Intel, so like in and out all day. Might trade the same stock 10 times in a particular day. The guys who sat on my left were utilities traders. So all they did was trade utility stocks and utilities bonds, options. They were the utility sector. The guys on my right were the people that traded the auto stocks. So all they did was traded auto stocks, and they were the experts. And one of the things they're supposed to do is if they see a really good idea or something that's really compelling, they're supposed to tell Steve. And if something happens and they don't tell Steve fucking freaks out, yells and screams. And he just, he turns bright red like a tomato. He pushes his seat back. He walks around the desk, yelling at people, just really F this, F you, how much did I pay you last year, blah, 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 blah. And then he leaves the desk and he comes back like 10 minutes later and it's like nothing ever happened. But one time I saw him, one of the commodities people came over and was like, dude, check out gold. And gold had really spiked up. So it was really kind of cool. Like Steve himself got on the phone and he was talking to a guy who was on the floor of the Mercantile Exchange out in Chicago. And, so he was communicating like, all right, buy now, sell now, buy now. And the guy's on the floor, running over there to what they call a pit,
Yeah.
And dude, in like 15 minutes, like he racked up $9 million of profit. Right. And then he's like, okay. And then he's like, all right, guys, I'm going to go get some food. I'll be right back. Like, it was just like nothing ever happened. It was really
incredible.
I mean, I was there a long time ago, but that really sticks out in my memory. I really remember that very well. But, he's like could be one of the best evers, man, And now he's pretty much just owns the Mets. And I don't really follow baseball, but I understand that the Mets are not doing very well. But yeah, so that's the story with him. It was really cool. It was a great learning experience. Then I had an opportunity to leave there and go be the head of trading at a money manager in the city. So I figured, well, I could just be a trader here, or I could go be the head of trading at a fund. And so I left, and I was the head of trading at this place, which no longer exists because the guy who owned it passed away. But there, like, we did everything. I had 6 people, I think, underneath me. I mean, we traded currencies, we had various hedge funds, mutual funds. Yeah, pretty much everything there. So that's my story. That's how I got started off. All right. Now, what else are we going to talk about here?
Randy's got the unemployment numbers up for you.
Oh, thanks. Let's see if that had any effect on the market. But I'll tell you this: the Cohen is a madman. But when he's off the desk, he's like a nice guy. But when he's on the trading desk, he he gets very, very intense. But I mean, think about it. People think that these big traders are trading their own money, but they're not. They have their clients' money, and they get money. They get paid by the fees. So this guy is responsible for billions of dollars of other people's money. So it can get pretty stressful, right? Now Mario used to yell a lot, but he was more like a football coach. He'd be like, get your head in the game, wake up, like stuff like that. Cohen would just, it was a whole different kind of yelling. But Mario was like a football coach. I remember one time he came running out to the trading desk, and he looked at the clock, and it said like 3:58. We had this like clock, but it was actually 4:01. The market had closed. The clock was like 3 minutes slow. And he comes out and he like wants to put in all these trades, and he's like, buy this, all this, and one of the traders is like, Mario, the market's closed. He's like, don't tell me how to tell time. It was pretty funny. And then he had his assistant Bonnie. It was like this really attractive woman that sat right next to him, and I heard him say like, Mario, that clock is slow. It's actually 4:01. And he was storming off the desk, and he slams the door. It was pretty funny.
That's funny.
All right. Anyway, so the unemployment numbers came out. It didn't really change the market that much here. This 450 level is important. We talked about this for a while, and it got there. It was there for 3 days, so it's not a major level. But notice how it was this little peak back here. So my guess is that there's going to be some resistance around 450, and there's going to be support down here around 443, 445. But again, we're really not moving that much. And if Amazon wasn't up so big, we'd probably have a pretty decent.
I think so too, Mastermind. I honestly don't know how the numbers keep getting better for jobs and less unemployment. It doesn't make any sense because I see places closing down.
You know what? Yesterday I noticed. Yesterday I got behind a mailman's truck, and there was a sticker that says "We're hiring." Then I went to Michael's stores and the craft store because I was trying to buy some paint, and they had signs like "We're hiring." And there was another place I saw too that's hiring. But you know what? Maybe people can find jobs fairly easily, but the food inflation is just getting friggin' ridiculous. And people say, oh, inflation's coming down. I think people think that when we say inflation's coming down, that prices are going lower, but they're not. Inflation is going up. It's just going up at a slower rate than it was before. I mean, look at gas. So actually, you know what? I wanted to look at oil.
You know what's killing me, Mark, is when they hand you the thing out the window at a drive-through and there's a tip on it. And if you don't tip at the drive-through, they spit on your food. That's the
Yeah, you got to
feeling
be
that you
careful of
get
that.
from that. That's not right. That restaurant owner is already making the profit off the food. How come I've got to tip the drive-through person that puts my food in the bag? And that
Well,
tip's not going to that person; it's going to the restaurant.
well, you know what? Me and Clifford have a tradition that when my wife is not here, I go over to Five Guys and buy us a couple burgers, and they have the thing, and it's like, dude, it's fucking, it's man, I got to stop smoking. It's $30 for two burgers, and I'm supposed to tip you just for ringing up the thing. So I don't leave a tip, but then I sit there and I watch very closely and intently
But you know
because
something? I am a super generous tipper. If somebody gives me quality service, I sometimes leave a tip more than my bill, man. You know what I mean? But to be forced to tip or shamed into tipping, that's a little bit overboard.
yeah, yeah, man, I couldn't agree more. Anyway, all right. So anyway, so I think this is kind of important to watch here. I think there's going to be some trading opportunities here in the oil market. And when I say oil, I'm not just talking about oil in and of itself. You could get exposure with some ETFs. You can get exposure by buying particular companies. Now, 82 is clearly an important level. We're at 81.73. And we can see here. Now, even in a market that's as big as the oil market, we get these basic principles, right? What was support becomes resistance. There's people who bought here who, when the market goes lower, they're like, damn, I made a mistake. I want to get out of my contracts. You got to understand the vast majority of trading is trading. It's traders. It's people that are in and out. It's not the big conglomerates or the industrials like that are buying futures to hedge themselves. Like, for example, if you're a trucking company, you might want to buy futures of oil to hedge yourself. If you think that the price of gas is going to go up, it's like, all right, you go out and you buy futures on oil or gas or whatever. So those are like people that are hedging or institutions that are hedging. The vast majority of trading, probably 90% of it, is people that are just trading, that are just kind of in and out. That's why it's kind of important not to get too caught up in the news. Like, all they talked about yesterday was like, oh, the market's down on the Fitch downgrade. The market's down on the Fitch downgrade, blah, 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 blah. What's today, Friday? I was talking Monday or Tuesday, like we're going to sell off because we got this really high sentiment and some of these sectors look technically kind of vulnerable. And guess what? The market went lower. Now, did I know Fitch was going to do a downgrade? Of course not. But the media feels the need to try to attach a news story to every single little move. So you know what? I think that if I was on a desert island and I had my charts, but I didn't have the news, my analysis would really not be that different. So don't believe the hype, man. Don't listen to what they're saying because the vast majority of the time when they talk about why the market is moving, they're wrong. These people that you see in these roles, like in the media, they're not traders, they're journalists, and they really don't understand it. Like the other day I was watching Charles Payne, go off about short sellers. He's on Fox Business News. Um, he's talking about short sellers, this, that, and the other thing. And it's like, why are people so anti-short seller? Someone sells something short because they think the price is going to go down. Well, someone sells something long if they think the price is going to go down. If you have a stock and you think the price is going to go down, you sell it. So how is that any different? That short seller is going to eventually have to buy those shares back, right? And
Right.
that's bullish. So anyway,
Check the cues, Mark.
Hughes is getting smacked. Let's see here. Well, you know what? That's because of Apple.
It's actually up a little bit at the moment.
Yeah, it's kind of flat right now. But if Apple is weak, this is going to, that's the biggest holding in this. But here again, we see our importance of knowing where the price levels are, right? Notice how what was resistance became support over here. So after this move lower, it's not a coincidence that this is where we found support. We found support here because it was a resistance level. Levels that were resistance, as we have seen, can convert into support. So what was resistance has become support. You have people sold here, and then the price goes higher. They sell themselves, damn, I made a mistake. I'm going to buy my shares back. So this is, if you're trading in Qs, this is going to probably break one way or the other. Because as we know, when things get to these important price levels, they tend not to hang out there for too long. They tend to go one way or the other. Now, based on what I was talking about before about sentiment, my guess is that this support breaks and we move lower. And I would say our next stop is probably down around here. If you want to kind of get price targets, look for former tops and look for former bottoms. So this is a former bottom, right? Markets go in peaks and valleys. So the bottom of the valley is an important place to look, and the top of the peak are going to be important. And that's like down here, right? What was the bottom here became a bottom again. So that's when people say like, well, how do I identify price levels that are important? Just look for levels that were former peaks and valleys or had formerly been support or resistance. But my guess is we go lower, but I'm going to put a caveat on that, is that it's summertime, it's August. Things tend to move a little bit slower because a lot of people that work on Wall Street, and I suppose in other industries as well, take vacations.
We're
Yeah,
just degenerates. That's all it is. We do this daily.
yeah. So, but then what happens is, once the kids go back to school and the weather changes, things really start to pick up in September. But that doesn't mean that we're not going to go down. It's probably just going to be a slower reaction than what would happen in September or in October. But this looks kind of weak to me. And notice here too, here's something else to look at. We're talking about, our peaks and our valleys. So let me go here and use my arrow. Notice how this top formed at a lower level than this top. It's pretty subtle, but when something like this happens, this tells us that the sellers are getting more aggressive. That means they're willing to sell at lower prices.
Mm-hmm.
So when you get what we call a lower high, it tends to be a bearish thing. So based on that, my guess is that we're going to break and go lower. Think about it. You've had this clear support level down here, right? So you got your buyers are kind of just hanging out, but your sellers. Oh, hey, Frankie. How are you, man? But you get your sellers are getting more aggressive. So you got complacent buyers, you got aggressive sellers. So it sets the stage for the market to go lower. And this is what our descending triangle is based on. As a matter of fact, I can show you all this in the healthcare sector, right? So this is what we call the descending triangle. And I don't pay attention to a lot of patterns, but I do like ascending and descending triangles. They're easy to understand, and they tend to be pretty reliable. There's no guarantee, obviously. But what is going on here, right? We have to look at everything through the prism of supply and demand. So you got a clear support level. These are buyers that are kind of just hanging out. They're like, all right, if the seller comes to me, cool, I'll buy it. If not, I'm okay with just hanging out and being patient. But at the same time, you have the sellers are becoming more aggressive. And notice how we have lower highs. So we have this high formed here, this high formed at a lower level, and this high formed at a lower level. So what does this chart show us? It shows us that we have complacent buyers and aggressive sellers, and that sets the stage for a move lower. And sure enough, that's what happened. But the key thing to look here is it's not like, oh, it's an ascending triangle or blah, blah, blah. The key thing to look at, I think, is you see those lower highs forming.
Mm-hmm.
And that just shows you that as time is passing, the sellers are getting more aggressive. They're willing to accept lower prices. So you got to look at these charts through supply and demand. Whoops, what did I just do here? And, we talked before about like our fast move up, fast move down. You could see it all over this chart. Like, look at this, right? Rip, we go lower. Now, we rip through these levels really quickly. And because of that, there's not a lot of time for people to buy. As a matter of fact, there are levels we didn't even trade at. On this day, we closed here. Next day, we opened here, closed here, opened here. So when buyers start to say, oh, gee, I think this healthcare sell-off is overdone, I'm going to go in there and start buying. They come in and there's not a lot of sellers around. So they're forced to pay higher prices. Now, if you look at like a sideways range like here, buyers can come in and buy all they want. Sellers can come in and buy all they want. Right in line. In line is a trading term. It's like, all right, buy in line. So like right around 130, or let's say 129. See all this trading that went in there. So buyers can come in and they can buy all the shares they want. Sellers can sell all the shares they want. In a situation like this, when the buyers come into the market, there's not a lot of sellers around. So they're forced to pay these premiums, and that forces the stock to go into an uptrend. So, yeah, so that's an important thing to understand. All right, let's see what else we got here. Let's look at, yeah, I would agree with that, Brandy. We've got to say if, it's probably going to be a slow day, summertime, Friday. Actually, the class today, I'm going to start it at noon instead of 11 at Benzinga because I just got some stuff I got to do this morning. So anyway, yeah, I got to put that out there. All right. Anyway, so here's Apple again. Look for some support around 183. It's at 185, so that's not that far away. But anyway, let's go on to some of these other sectors here. Let's look at our energy sector now, because as we saw, there's a good chance that oil is going to make some kind of a move. And the energy sector stocks, not surprisingly, track oil a lot of times. I mean, there's other things going on in here too. There's natural gas. But notice how we got to this very clear resistance level. And this morning, we're trading right around 87. So there's a good chance that this breaks one way or the other as well. If we reverse, you can start looking at some of these names in the oil sector for potentially buying some puts. I think what's really kind of sticks out to me. Now, remember, it could go up or it could go down. I don't think it's going to trade sideways for an extended period of time. So if we do go down, if we don't get through this resistance and we do go down, you can play this, you can buy puts on this, or you can look at stocks within the sector. Now, why do things that get to resistance tend to sell off? Well, you got people who want to sell, and when a market's moving higher, as we discussed, there's not enough supply or sell orders to fill all the demand or buy orders, so the buyers are forced to pay higher prices. When we get to a resistance level, a price level where there's a lot of sellers, the price stops moving higher. So some of these investors that want to sell notice, oh, the price isn't moving higher anymore. I've been watching this since, early July. It's been moving higher. It's not moving higher anymore. So what does that mean? That means
it's pretty funny, JTI.
So people say, all right, the price isn't moving any higher. That means there must be more sellers coming into the market. And if you're a seller, you might start to get worried and thinking, oh, gee, if there's sellers who undercut me, then the buyers are going to go to them. So I better reduce my price. And you get this snowball effect of these sellers undercutting each other. And that's what makes us move lower. Now, I looked through the sector, and I think the most interesting thing that I saw was this Phillips 66 stock. Look at that. We actually reversed. Remember we talked about this as a potential trade. It was actually down 3% 2 days ago. But yeah, I mean, 3% is a huge move, especially if you're an options trader. And what happened, right? We got overbought and we got to resistance. Stocks markets that get overbought and get to resistance tend to sell off. So this RSI indicator down here tells us, oh, if the blue line is above this horizontal red line, it indicates overbought conditions. So overbought gets to resistance, sells off. Overbought gets to resistance and sells off. Overbought, got to resistance and made a move lower.
Boy, that one sets up with the chart nice. I mean, the RSI and the chart line up perfect.
It's not a loss until you sell. I have issues with this Mullen company. I mean, I don't know too much about them, but the stock has gotten decimated. And what happens, right? The management comes out and they blame naked short sellers. Oh yeah, short sellers. Never mind the fact that we're losing hundreds of millions of dollars. It's the short sellers, and that's just a sign of management that doesn't want to take responsibility. Just trying to go back here. Yeah, I mean, this is pretty amazing, but if you just go back through history and if you go look at these bubbles, something losing 99% of its value, it's not an uncommon thing when you come out of a bubble territory. Like, look at a lot of these Reddit stocks. Well, this was a Reddit stock, right?
Yeah.
I mean, this is
back, I believe.
the Reddit craze really kind of peaked out in early 2021. This thing got up to $400. Now it's at 14 cents. I mean, think about that. That's what is that, down 99.9%? Right. So anyway, that's just kind of an excuse. Like, oh, all right, well, it's the short sellers knocked our shares down. Well, guess what? There's probably people that are selling it long too. There's people who bought it up here who are like, F this, I'm done. I'm going to sell it. It's just I don't know. I just think that that's a management that just is looking for an excuse. And, it's like, dude, the reason why your stock is down is because you lose a lot of money. It has nothing to do with short sellers, right? You got short sellers in Apple every day. Is Apple going down? Well, it's going down this morning. That's not a good example. But, you have short sellers and long sellers. Now look at this Aurora Cannabis, right? And this is the case with a bunch of these cannabis stocks. This thing was up to $150 a share. Now it's at 56 cents. At least they're not bitching about short sellers. But it's coming out of a bubble, right? It's not unusual for something to have a move down that's that dramatic. In the NASDAQ bubble or the internet bubble back in the late 90s, there were stocks that were trading for $300, $400, $500 a share, and that within a year or two were penny stocks, like literally penny stocks, like trading for pennies, and a lot of them went out of business. So I just think that's a distraction, and they're like, oh, it's the short sellers, I mean,
well, it's like Yellow, Mark. Well, Yellow filed bankruptcy, and the stock went skyrocketed for 2 straight days.
Well, I think that's because it got down low enough, and people started thinking, like, wait a second, this stock now. So what's our market cap now? 187 million. So when it was down to here, the market cap was like 50 million. Yeah. And I think people probably, and it's trading up pretty good this morning. People probably realize, wait a second, the market cap of this company is only $50 million. They got a lot of assets.
That's what I'm thinking.
They have distribution centers. The value of this company needs to be higher than $50 million. That's what back in the 80s, corporate raiders were a big thing. And that's what the movie Wall Street, that's what Gordon Gekko was. These type of investors, they would look at a company, and if the assets of the company were greater than the market value that it was trading at, they would go buy the company and they would sell off all the assets. And it was controversial because a lot of people lost their jobs. But I think that's kind of what's going on here. I mean, this company has to have some kind of value. I don't know how it works. Do they need to sell stuff? Do they need to pay their pension plan first? I'm not a lawyer and I'm not an accountant, but I think that's what happened here. So there's some value here. Maybe someone else comes along and buys them out. And whereas Tupperware, I think, was more of a meme stuff thing. It just went up just because people were hyping it. Oh, look at this.
Yeah.
Oh boy, here we go. More easy money to be made, back up to 550. Let's see what happens. Oh, there is news. Debt restructuring agreement. Market watch. Let's see what that is. Tupperware brands climb 90%, blah, blah, blah. The agreement price for a reduction of $150 million in interest and fees. All right. Well, that could be good news, right? Sometimes when something moves and there's news, it could be kind of legitimate. But when something moves and there's not news, then it tends to come in, right? And that's what happened here. The stock blasted off for no reason other than it got caught up in some Reddit chat room, and then we were down big. This is one of the things we talked about. But now we're back up to 550, and it's not a coincidence that we're at 550. It was a support level here, and as we know, support turns into resistance. What is the penalty for shorting? Yes, JT, I'm surprised I didn't get more hate mail after that. What is it? I don't know. I don't know what the penalty is. I mean, I would imagine you get fines, but in my role as a trader for 20 years, I mean, it was literally impossible to sell something short naked. You just couldn't do it. The operational systems and all your systems just wouldn't allow you to do it. When you trade, right? You call up your broker and say, "Hey, listen, man, I want you to buy this or sell that." You send the order over electronically, and then you send your order from your what we call an order management system, and it goes over there and pops up. Now, if you're selling short, you legally are obligated to tell the broker this is a short sale, and the broker is going to say, "Okay, who did you borrow the shares from, or what's the code?" So you would call up a place and you would borrow the shares. You'd call up Stock Loan, or the brokers would get it for you, and you have to type in the code. And the other thing too is if you sold something naked, if you didn't borrow the shares and you just sold something, those shares have to come from somewhere. They don't just pop out of thin air. They got to come out of one of the accounts. So the custodian's going to call you up the next day and be like, "Why are you selling a stock that we don't own?" So, maybe this naked short selling goes on, maybe it doesn't. I don't know. But in my roles, it was just a physical impossibility to sell something short naked. I mean, the only way I think I could possibly think about it is if you call up a broker and you say, "Hey, listen, I want to sell these shares. They're not in my account, but I got the stock certificate here at my house. So I got 1,000 shares of Tupperware. Here's my stock certificate. Sell the 1,000 shares, and I'll stop by your office in a couple hours and drop off the certificate." So, I don't know. I don't know how people can do it. I don't understand it. I've talked to my friends who are market makers. They kind of don't understand it. I don't know. But if you are to do something like that, I mean, the very least you would get fired, and then you'd probably get fined. It's probably just a monetary fine. Yeah, we talked about UNH before, Frankie. I'm watching that $500 level here, and I think if that breaks, this thing could sell off pretty good because we had our rapid move higher, and a lot of times when you have a rapid move higher, you get back to those price levels and you get the rapid move lower. Now, me personally, I would probably be on the sidelines until this got below 500, and then I would jump in.
We saw Johnson and Johnson move last week, which are the two biggest portions of that sector, the two biggest holdings of that sector.
Johnson and Johnson. Yeah, I mean, to me, this looks kind of neutral, but again, look at this, right? Where did we find support after the sell-off? I guess they probably reported their earnings. The stock blows up. Where does it find support? At a level that had been resistance. Levels that were resistance can turn into support. So if you were trading this, and I wasn't, unfortunately, but the stock collapses, and it's like, you know what? Maybe the numbers were bad, but I don't think they're as bad as people think. So I'm going to buy it. Where should I buy it? Oh, look at that. A level that had been resistance. So there's a good chance it finds support there. So while it's falling apart, it's like, all right, it's at 169, it's at 168. You're just kind of waiting. Oh, wait a second. It gets down to 165. That was resistance. So there's support there. So this would have been I know it's hindsight's 2020, but this would have been a fairly easy trade to find because we know that things find support at former resistance levels, and that's what happened right there. Yeah, I don't know, man. I get mad at this whole Reddit crowd because it's like, dude, if you lose money, it's like it's your fault. It's not the fault of some hedge fund or some market maker. Okay, if you lose money on a trade, you got to ask yourself, why did I lose money? And these people say like, oh, the hedge funds are out there to rip people off, or market makers rip people off. Think about it. For every buyer, there's a seller. So you could argue they're each trying to rip each other off. Someone sold up here and someone bought up here. Was the seller trying to rip off the buyer? Did the seller know the market was going to go lower? I mean, to what degree are you going to take it? It's like bad, like Steve Cohen says, right? Good traders are introspective and they deal with their demons and they deal with their bad habits. Bad traders just blame someone else, right? So every time you trade, if you make money or if you lose money, you should really ask yourself, what did I do right or what did I do wrong? All right, everybody. So it's 9:00 now. I'm going to get going because I got some things to attend to and my ankle is really killing me. I'm going to go put it up for a while. And that's it. So I guess we'll be back on Monday. And I hope you all have a nice weekend. And
Everybody have a beautiful weekend.
I will see you Monday morning.
All right. Do something nice for somebody. Spread some humanity. Have a great day, guys.